Hey folks, welcome back to another rate update with Dan Frio. My name is Dan Frio. What I try to do on a daily basis to inform you guys what's going on in the economic news that's going to play a role in stocks, bonds, crypto, and especially with real estate because I'm a mortgage advisor. So if you're out there and you need help with a mortgage, maybe you're looking to get pre-approved, maybe you're even looking to refinance because you closed last year and the rates were 7 something and maybe there's a little reprieve there. Or maybe you're looking for a reverse mortgage or maybe a debt consolidation. We would love to help you and I'll give you my information at the end of this. But we try to focus in on here is what is the main news stories out there that's affecting the markets. And you're seeing right now it's the debt ceiling is number one. All of our callers, that's the number one question they have is if the debt ceiling doesn't go through, then what? And then the number two thing is the Fed. And the Fed's always in the news. So we're going to talk about those two things in detail today, and I'll give you my thoughts on what I expect the resolution of these things to be. So without further ado, here's the little bit of a scary part. What you're seeing on this chart right now is what the Federal Reserve is planning to do at their next meeting. Okay, this is what's coming from the Chicago Mercantile Exchange, and you can see it right here. This is the futures market, and if you can see down through here, what is the likelihood that the Federal Reserve will change their target rate at the upcoming FOMC meeting? So you go down through here and you see the federal funds futures. These are where people are putting their money betting on what the Federal Reserve is going to do next time. So we're right here. Right now, we're at a federal funds rate of 5% to 5.25. So we're right in this range here. Well, just the other day, this thing popped up. And I was expecting this to pop up. It's the next rate increase if the Federal Reserve were to increase rates even once again. But it wasn't even here the other day. Now, the probabilities of them increasing rates at the next meeting in June are about 20%. So this went from basically 0 to nothing to 17 to 18. Now it's at 20. So I think the biggest concern there is that, like, you guys are concerned about the debt ceiling and other things like that in the news. So let's get over to the economic news to see what's coming down the pike, to see what's going to change some of these things. So what we have today is building permits. You're seeing that right here. Building permits were a little bit down from where they were. And I'm a proponent of this. If we do not have a robust building season, house prices in some areas might be flat to up because there's just nothing out there, guys. Existing home sales, we're going to show some numbers on there. That's coming out tomorrow. So we're going to look at those numbers here in jobless claims, initial jobless claims, because that's where the Federal Reserve said we're going to inflict pain on households. Where are we going to inflict the pain? We're going to inflict it in housing and jobs. So right now, the jobs market is really in jeopardy. So what we're looking at is the building permits. They came in a little lax, but I don't think that's going to be the resolution here. I think they're going to keep adding and adding and adding to their to building permits, and builders are going to keep growing from there. Let's go over to the stock market and see what the major news is there. Dow rises more than 100 points. It's about time on debt ceiling hopes. So right now they're saying, well, we might have some resolution and we might actually solve this thing by the end of the week. I told you guys, don't worry about it, but it could cause huge havoc right now in the markets. When I'm talking about the markets, stock market could basically crash on this news. Mortgage rates could skyrocket even further. So that's why we do have a product out there. I'm just throwing this out there because I just realized it. We have a lock and shop program if you guys are interested in that. If you're in the market right now to buy a house, do you realize you can lock in rates what they are today? And you're locked in for 120 days. So if rates go up, you don't have to worry about it. The good news there is if rates come down, we can either renegotiate with the bank that we've already locked your rate in, or we can move you to another lender because we have we have just shy of 70 lenders in our arsenal right now that we can use their rates and their programs on top of what we have here at the bank. So that's a good plus or win-win for you guys out there. So right now the Dow Jones is up because of the debt ceiling controversy going on right now. So let's go over to, so that's the debt ceiling. So now let's go over to the inflation front. Here's what I want to show you guys. Here's a chart that was just recently posted, and this is what the CPI numbers came in at. Now, you're seeing down through here the shelter numbers, okay? They're having shelter numbers right here. They're saying the shelter numbers going back to, here, let me find you these dates, October of 2022 all the way to current. Let's see the shelter numbers. We're seeing so far is they have shelter up what is that, 0.7, then the next one up 0.6, then up 0.8, 0.7, 0.6, for a total of 8.1% is how much shelter prices went up last year so far year to year. Okay, so why am I showing you this? Okay, because I continue to say, guys, inflation isn't as bad as you think it might be. And there are sectors in here that are completely out of whack. Like if you go out to dinner, it's so expensive, it's crazy. But we want to focus in on the biggest component here, which is shelter, which makes up a third of the CPI numbers. So they take all these numbers and then they take the shelter piece and give it the most weight. Here's the interesting part I want to show you guys. Here's actually what rents have been doing over the past, well, since February of 2020, okay? If you see here, here's what I'm saying it. Every month here, you're seeing that the rents or shelter costs have increased. See it there? Okay. So let's go back over to this chart. When's the last time that you see anything in here increasing? Here. Okay. So the Federal Reserve has not yet factored in this decline into their numbers. So if you're up 16% here, let me get my head out of the way once again. And now you're at 0.3. There's 15% move here, not allocated in these charts. Okay, so that's why me and a lot of other economists are saying, guys, when this all catches up, the inflation numbers that you're seeing are probably in the tune of about 2.5. Yes, it's not the 2 that the Federal Reserve expected, but it's a far cry from where we are today. So really, there was no economic news out. I just want to explain to you guys, because there was really no economic news other than building permits, what we're fighting here. We're fighting basically the Fed and the debt ceiling. So relax on the debt ceiling, guys. It will be worked out. And I think what we're going to see is a quick and big movement by the Fed once they realize inflation is basically almost where they need it to be. Because here's why. These are how many times the Federal Reserve has raised rates going into this month. So look at these rate increases. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 rate increases. And people are saying, well, what's the Fed doing? Are they going to do anything major? You know, are they 0.25% here and 0.25% there? Isn't going to add up? Well, it sure adds up. This federal funds rate just a year ago, or a little over a year ago, was 0. Right now, it's 5 to 5.25. Think about that. That's a huge move from where we were. So if you're out there and you need some assistance with a mortgage, we'd love to help you. We'd love to solve this equation, because you guys might be sitting there saying, I don't know what I qualify for. I don't even know a realtor. I don't even know where to start. Well, the weird place to start is right over here. Give us a call at 844-775-5626. We can help you do this. We can help you talk through the numbers. Do you qualify? How much do you qualify for? Are you moving to an area where you don't know anybody? You don't need a realtor. You don't know a realtor. We'd love to help you vet a realtor. We have a free service. We can help you. You tell us where you want to go, the neighborhoods, the county, the city, wherever you want. We will vet realtors in that area for you at no cost for you to use. You don't have to use them. It's just a service that we provide for you. So thanks for watching, guys. God bless. Don't forget, we will be live tonight. I'll be with Rick McCone. He's a new member of our team. Check him out. Just Google him. Rick McCone, MCHONE. He'll be our live guest tonight to answer all your first-time home buying questions. So check that out. Other than that, have a fantastic day. I'll see you tomorrow. Bye-bye.